Let's take a look at stocks here at the open because a bit of a muted open here for the market. The Dow falling back into negative territory below 38,000 after closing above that level for the first time ever on Monday. Earnings season is now in full swing. Are these quarterly results, will it be enough to signal to the market that maybe this rally that we've seen has legs? For more on that, we want to bring in Seema Shah, Principal Asset Management Chief Global Strategist, is here. And Seema, when you take a look at the recent rally that we've seen, a lot of that driven by some of the chip stocks, some of the tech stocks that have been under pressure at the start of the year. Do you think we still see some more movement here to the upside?
Hi, great to be on with you. So, look, I mean, clearly tech, especially the Magnificent Seven, they performed exceptionally well last year. And there are, of course, questions coming into the year of whether or not that can be sustained, especially when you look at the valuations, which are very stretched. Now, from our perspective, you probably won't see a similar year or as strong a year this year as what we saw last year for those tech companies. But there are some real fundamental drivers behind them, which we don't think are going to be really put to bed yet. So, of course, we have the AI saga, which continues to drive expectations and productivity. So that should sustain earnings going forward and to keep tech performing well. And the other thing is, as long as there are concerns about the economic cycle, what the Fed is going to do next, you will still see investors looking for big balance sheets, big brands, which is what a lot of those Magnificent Seven really bring to the table. So we are expecting a decent performance this year, not as strong as last year, but certainly not something that we would start to reduce exposure significantly.
Seema, is there one core theme that could emerge this earnings season that continues to power this market towards more all-time highs?
So at the end of last earnings season, one of the things that everyone was watching out for was evidence of consumer slowdown. You know, it's been talked about for so long, this expectations that consumer spending would eventually start to cool down. And you did see a number of CEOs really pointing to that concern during their earnings season. So this time, I think a lot of questions are going to be pointed at that. Are they seeing that long-awaited consumer slowdown? But more importantly, what's happening with margins? Because for this year, although we're expecting a fairly positive year, we are expecting some margin compression. So some of those pressures coming through. And so from our perspective, actually Q1 could be a bit of a volatile quarter. You could see maybe the market pulling back a little bit as they start to question, of course, what the Fed is going to do, but actually how strong earnings are and can they really justify the very stretched valuations that we've had coming into this year.
Well, and Seema, coming into this year, one of the most popular calls on the street was to invest in small caps, that they will likely get a boost as the Fed was expected to cut rates as early as March. We certainly have seen a bit of a cooling there within that trade. What's a necessary catalyst? And do you still think small caps are an attractive bet at this point?
So I do think that this year you're going to see a broadening out of that rally. So moving away from big tech into other parts of the market, and similarly away from, I guess, broadening out from large cap to that small cap space. But as I said, I think the first quarter of this year is going to be somewhat challenging for the market, and in particular, some of those more cyclical stocks, such as the small cap space. And the reason is really around the Fed. You know, the market has come into this year with wonderful expectations for this idea that the Fed will start cutting as soon as March. That to us seems a little bit premature. So as the market starts to digest that, debate that, and that probably pushes out the date to June is what we're thinking, and that pressures small cap. But historically, what you've seen is as long as the Fed starts cutting against a backdrop of continued expansion, actually small cap typically should outperform large cap. It may just not show through in a sustained way until you get towards the second half of this year.
How many cuts should investors be expecting from your purview?
So we're not expecting as much as what the market is expecting. So there's 6 to 7 rate cuts. Historically, that has only happened if there's a recession or a financial crisis, neither of which we're anticipating. So if you only have a gentle economic slowdown, well, then you only need a gentle cutting cycle. So we're only expecting 3 to 4 rate cuts this year. So a fairly gentle progression because the economic backdrop is fairly solid still.
Seema, how much of that optimism is already priced in at these current levels?
I think there's a lot of optimism priced in. Again, you know, if you look at the last quarter of 2023, there was just almost perfect conditions priced in. The market is expecting a soft landing and early Fed cuts. So the only thing that could happen, I guess, in coming into 2024 is a little bit of disappointment because that optimism has just been so much secured within the market. And I think this is now when you start to see some of that disappointment, some of those optimistic expectations are unraveling. But I want to hasten to add, you know, we don't have a negative view for the whole year. We just think that the first couple of months, first quarter or so of 2024 could be a little bit challenging as the market tries to find a very clear narrative. As you get towards the second half of the year, a lot of these question marks are cleared up. You start to see Fed rate cuts, you start to see economic slowdown, but it's not devastating. And I think at that point, investors do feel a lot more confident, and you can see a sustained rally in not just the broader market, but also in some of the more cyclical spaces.
Seema, really appreciate the conversation here this morning, putting some more context around some of the all-time highs and the broader environment that we are in right now. Seema Shah, Principal Asset Management, Global Chief Global Strategist. Thank you so much.
Thank you.